Greetings traders, this is Houston Trung from thetradingedge.org, and here is your weekly market outlook for February the 10th to the 14th, 2020. And so this past week, the buyers were able to take some of the fear out of the markets by bidding it back and preventing the year from turning red. Coming into this first trading week of February, we were in clear and present danger of not only turning the year red, but also breaking below January's lows and setting up a potential deeper pullback. As I said just now, the buyers did defend where they needed to defend, and we hit all-time highs once again. However, as I'll get into this video, we are now setting up for correction in the horizon. I'm not saying it's going to crash, but based upon the market structure the market's leaving behind, it sets up in the intermediate future for a potentially steeper correction, which in the longer term picture, if you take a big enough perspective, whether that's a monthly or yearly perspective, it'll simply be another pullback in a long uptrend if you go back and look at some of these yearly charts or monthly charts in equities. So with that being said, that's the premise of the video. We'll get into the weekly outlook now. We'll talk about the week coming up right now for the econ calendar for the week of the 10th to the 14th. We have Jerome Powell speaking on Tuesday, so people are going to be looking to see if he's got any new comments, especially as pertains to perhaps keeping the liquidity taps open because of fears around perhaps slowing global growth due to the ongoing coronavirus story. Then there's the oil number. We want to be watching that because oil has been getting really beaten up. We'll talk about some of those stocks and that oil sector as well in today's video. Jobs claims and CPI number on Thursday morning, something to watch for. And of course, retail sales on Friday. And the retail numbers seem to be strong. And so let's continue to see if the U.S. consumer continues to act and carry that confidence. Now, earnings, still a busy earnings week. Lots of stuff going on, so definitely keep your eye out on the names that are reporting. Make sure you're not taking on any unnecessary earnings risk. Tuesday, Wednesday, Thursday being the really busy days. Tuesday, some of the higher beta names include things like Lyft. So people are going to watch and see how Lyft is going to perform, especially after Uber's blowout numbers. So watch for Lyft on Tuesday. Then on Wednesday, we got Shopify. So that's a high flyer. Let's see if the story continues. For Shop, CYBR, software company. We got some got MGM reporting as well. So Wynn got hurt this past week. Want to see how the other casino stocks are, how they're doing. And HubSpot, another good name to watch. Just it's one of the pillars of that enterprise software space. So we want to be seeing how those cloud players are playing out. And on Thursday, Baba. So a big one. We want to see how Baba's doing. Are some of these virus scares getting into some of these Chinese names, or is the market still turning a blind to that? So we want to watch that. Nvidia also on Thursday. Roku, and these are really the big ones we want to watch for on Thursday. Okay, so that's the majority of the big names. So let's get into the charts now. We'll talk about the week that was, the current state of affairs as it pertains to the market price action, and the potential correction in the horizon. We did hit all-time highs, but the breadth just wasn't there. And so in the past, when we've seen that, then ultimately this sets up for a deeper pullback in the future. Because as the market makes new highs, you want to be seeing the internals also supporting that. And now we see a large divergence. And this is what usually happens when the market creates new fresh highs off of a pullback, but not as many underlying stocks are able to keep up. And so now you have a smaller group of leaders that are carrying the markets to new highs. However, if and when the time comes and those stocks begin to come out of favor, then that sets up for that deeper pullback. So let's talk about the VIX as we always do first, and then we'll get into the rest of the indices. So VIX, let's just point out what we know about the VIX. So right now, as it sits, it's an inside month. So starting on the monthly chart here, always start out here. Monthly chart, inside month, all right, inside of last month's range, currently a red bar. This week, we really wanted to see what was going to happen here because the prior 2 weeks we had a momentum up situation, right? Outside bar and up last week. We had a bit of fear that got elevated there. And the question was, can the buyers continue to push the VIX up and the indices down? That was the line in the sand right there. You wanted to see, can it crack above last week's highs? It could not. So immediately this week it opened up low, and then it came back to the range again, breaking below the prior week's low, extinguishing that momentum. Now we're looking for it to come back down now and take out that prior low there, because some of the indices are hitting all-time highs once again. So now on the daily chart, it is a little bit messy, but this is what it looks like. So this, and again, we'll get deeper into the SPY in a few moments, and you'll get that mirror image of things. And depending on who you are, sometimes it's very useful to see the exact same picture but in reverse, right? So sometimes by seeing it in reverse, you know, if you're a long only guy, sometimes seeing the short side, it's actually very valuable. Sometimes if you're kind of a short, you know, you have more of a short bias, seeing the long perspective allows you to see things more clearly, more objectively. And so that's why I find value in looking at both the VIX and the SPY product, because even though they trade in very correlated ways, slightly different way of looking at of price. So on the VIX is what happened. So it was going really gung-ho going into last week's close, right? So here's last Friday, and so it really looked like we were going to come back to the range, unfilled gap right there. Actually, a number of them, one over here, one over there. It looks like we were going to come back to the range. This is what happens though on Monday. You open down, it gaps down inside bar, and the buyers and sellers can't do anything there, and they keep it inside bar. This is a stalemate, right? And so you really want to be seeing how it breaks the next day. And as you know now, though, as the market's basically, except for the last kind of 2 trading days of the week, Thursday was a little bit weak, and Friday we did get a bit of selling, but nothing heavy. But certainly when it Tuesday gaps down, it doesn't come back in. That's it. That's it for the move here. The momentum move has been extinguished, and now they're fading back through the range again. So we break below the prior week's low. We do a gap fill too, right? So here's the thing. Here's the gap down here, right? So see the gap there on that green line? There. On Wednesday, we gap filled it. So gap down, fills that gap, gaps down again. Here on Thursday, this day here, we get a reversal because it gaps down, but price comes up and closes that gap. So it's a gap reversal right there, and they gap up the following day. So it gaps up, opens up here, comes back down once again, and now we have a kind of a gap fade there. So we can easily come back down again on the coming week. Ultimately, this is what's holding now, because you broke below this. Looks like a black line, it's kind of but it's actually more of a blue line. It's a combination. This is blue here, it's black over here, but this line here, that indicates your quarterly open. So this orange line here, that's your monthly and weekly open. So we were playing a bit of pinball for 2 sessions. We opened up there, right inside, right in between the monthly open, the quarterly open, and down. Sorry, that's the weekly, monthly, and here's your quarterly. So we had 2 sessions where we were inside that range, and finally we broke below it, and now look what happened. Friday comes up, tries the test, gets very close to testing that quarterly open. Nope, it gets rejected. So now you're trading with full time frame alignment back to the downside on the VIX, and you expect it to go down further. That's the reality. Is it gap faded here, even though it was kind of a weak Friday, it could not gain any strength here. So now if it breaks back below this low here, that low right there, expect to come back to the range once again, because that'll be a reversal. That'll be a sellable pullback. That's simply a impulse move down, pulls back up, whether it's a 1 or 2 session pullback, comes back down again, you know, that will come back to these lows again. So we'll get rid of this gap here now. This gap has been filled, right? It got filled on Wednesday. We now have an unfilled gap. We have any unfilled gaps down here? Nope, none left. So we'll get rid of that line. We'll drag it over here, because we have some unfilled gaps up here. But there's no guarantee these gaps will get filled to the upside, because you may or may not know, VIX is guaranteed to go to 0. So sometimes the price will never come back to where it originated. So right now, let's leave that there. But eventually, if it doesn't come up, we'll get rid of that line. We have an unfilled gap right there. Okay, so if price does somehow push higher, we still got that monthly open right here, acting as resistance. Okay, so we want to see if price can come back up, how it acts against this line there. So that's basically it. Inside bar, down, 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 continuation move. Then on Friday, pops up, but the gaps fades. Okay, so would not be surprised whatsoever to see this can come back down again through the range. So we really want to be watching the ranges now. So it's a up. I talked about the chart already, right? It went up and down. So that's a reversal. Okay, so up, down, reversal. So now you want to be seeing how this particular range breaks. Very simple trading. So this week's range, where this week do you trade in relation to this range? You break below, come back down. If you break below, it's going to take out that pivot there. If it breaks above, then we know we have some unfilled gaps to take out in the upside, to the upside. Okay, so that's the VIX. Now let's talk about SPY. Mirror image. Let's talk about the bigger picture first. So right now on the quarterly chart, all right, so we got 1 full month and 1 week of trading under our belts, and so this is what the quarterly chart looks like so far. So far, green quarter on the SPY. It had turned basically slightly negative on the quarter, on the year, but this past week we pulled things back up again, and we banged off those all-time highs, and so now it's looking like a green quarter, up 3.23%. So in order for there to be a big, I'm not going to overweight this right now because I think I've talked about it enough in the past couple of videos. In order for this to be a really big reversal, if you really want to see a huge correction, you have to take out that low right there. Okay, that's really far down right now, 285.08. Not saying it's not possible, but this is what you need to see in order for it to turn to a really big reversal that scares a lot of people. All right, this means from here you have to come down through here and down through there to make that an outside bar in 1 quarter for this thing to get really nasty. Nothing in the card shows that yet because we're trading near the highs. If you get down here, or down here, then maybe that puts us in play. But right now, you're not seeing this, and so this means you might have another quarter at least until you see, or to the end of the quarter before you have a bigger pullback. If anything, we've said, it might come back into this area here, and that's going to be a regular size pullback in a larger uptrend. So remember, this is the largest, these are larger pullbacks, right? So see here, this is a minus 14%. If you recall Q4 of 2018, we had that big scare in Q4. It came back through the range and took out that prior bar's low. The difference here is that this bar was not above this bar's high. This is basically, this bar takes out just one side of the range, that side. Here, you've already broken above this bar's high. So in order for this bar to come back through the range, this has to turn to an outside bar. Okay, so in your head, what's the likelihood of this turning into an outside bar? Right, so that's what you need to be thinking as price begins to continues to transact for the next, until the end of the quarter. What's the chances that the buyers give up and the sellers can take control and push the thing all the way back through here again and turn it into a red outside bar? Okay, that's the only way you're going to see a large reversal. Okay, so on the monthly chart, what do we have so far? Big green month, up 3.27%. Again, this is really based off the prior week. Here's the prior week's action. We were watching this prior month's lows, or last month's lows this past week, right? So we were saying when it opened here, right, there was a chance the sellers had to got more aggressive. They could have taken out January's lows and made a bigger pullback and play into this top end of this broadening formation resistance line, or support line, excuse me. But the buyers took control right away, and now we have a continuation of this momentum move to the upside. Outside bar, up, 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 right? That's momentum move to the upside, has not been extinguished yet. Same picture as a quarterly chart. In order for this thing to reverse, this bar now has to turn into an outside bar. There's a better chance of this happening on the monthly than the quarterly, obviously, because it's a smaller range. Again, but you have to be thinking, what's the chances of it? And anything's possible. But that's what you're looking for in real time, and having that situational awareness, right? As price unfolds and you see price come back down to here, having the awareness to say, you know what's possible? This thing could actually go outside bar and take out that pivot low and then come back through the range. So don't forget the larger picture, because that sets up the bigger term stuff. But right now, it's not that's not playing out yet. But that's something to be aware of if and when that happens. So the weekly, no signals right now for reversals, right? Because like the monthly and the quarterly, you got to take out the prior week's low. Did not happen this week, right? This week, they bought it right from the get-go. You see that? The low of the week was 323.22. It opened at 323.35, so it went down, only 13 cents, and they basically bought it all the way back, except until, late Friday, late Thursday, until Friday session. So they created a reversal. It went down and went up. So now you want to see those ranges once again. How does it break out of this range? And the ranges are fairly wide, right? So this is a 3.25% bar. this is a fairly big bar. If you look in, just basically on the past, let's say, few months, this may be the biggest bar for the past several months. Maybe this bar's larger. If I move this out of the way here, it's a little toolbar. We got way back here in the end last week of September. I'm just gonna let's do a quick price check here, price measurement. Yeah, that's a 4.79% bar, and this bar here, in percentage terms, 3.39. Right. So this bar, the only thing we haven't had a bigger bar than that since this week here, so the last week of September. So what does that mean? Why is that important? Well, you kind of want to see now what happens with the next bar, because if you stay inside the range here, that's going to be an inside bar, or if you break up and fall back in, it's going to be inside bar and it's going to be choppy. Okay, so that's what you have to expect. If it breaks above there and stays above there, it's back to the momentum move that we've been used to for the past several weeks. If somehow the sellers can step up and take it all the way back down here again, come back through the range, that'd be something very bearish, and that's something you definitely want to be paying attention to if it starts to unfold that way. But for now, the buyers are in full control. So big green week for the buyers, and we got those all-time highs again on the SPY. And so this is the situation on the SPY here now. Here's the thing, right? This is what we talked about right there on the VIX. Friday looked really ugly for last Friday. Okay, last Friday. Then on Monday, the best they could do, the bears that is, was to hold them within a holding pattern inside day on the SPY on Monday. But look at the time frame alignment. There's your purple line, that's your weekly open, that's your monthly open, and there's your quarterly open. Full time frame alignment to the upside, right? So that means you're trading above all those lines. I mean, everything is green. So once it breaks above there, it's gung-ho time. Everyone knows where the stops are, right? If you got short in this sequence, let's say you got short in here, right? You got stopped out there, right? So it went all the way back. If you're holding your shorts, hoping that it was going to work, they took out those highs, and now you're just hoping that it doesn't keep going, because this is not really a reversal, right? So this is a small reversal on the daily chart, very, very small, but that's not going to take out folks who are using the weeklies and monthlies and quarterly charts as their execution charts, right? This is a small blip, and it may pull back into this unfilled gap here, or it may not. Okay, so let's move some of these gaps, because that gap got filled a little while back, and now we have one right there, which even though that pullback goes back into the 8-period moving average here, and that's nothing too significant. Okay, so in the short term, that could be something that plays out, but in the longer term picture, as we know now, we hit those all-time highs, and yeah, it would take a lot to create a larger reversal. So let's take a look at a chart that we haven't talked about probably about a month, and this is what I talked about earlier. So ultimately, because we have this situation now where we hit all-time highs, the issue is that we were not being supported by some of the market internals. Okay, so one indicator that I used to track some of the market internals is one that I find quite useful, is the S1F1 chart on TradingView. That is the number of stocks in the S&P 100 that are trading above their 50-day moving average. Okay, so right now that's indicated in the blue line right here. Okay, SPY is the candlesticks. This blue line is tracking those S&P 100 stocks currently trading above their 50 period. Look at this reading here. So this is back in late December, the 27th. At this point here, we had 89% of all those S&P 100 stocks. At that time, they were trading above their 50-day, and that's when we were hitting those prior all-time highs, and that was being supported by the internals. But as we traded higher, right? Look up until the third week of January, we had here, right, a lagging indicator, right? So now we don't have as many S&P 100 stocks making or keeping the 50-day moving average, and they have fewer and fewer of them, and prices going higher and higher. So that's your classic technical analysis. They call it negative divergences. And so as you see here, it didn't take much, and this caused the correction. We had the correction here, and that stopped out all those folks here who are chasing, who had that FOMO move going into January. Now once again, right, we have that situation. Okay, so here, all-time highs, but look at the number of stocks way down here now. Less than 70%. So significantly fewer. Okay, so here we got really oversold, right? So here's last Friday. So last Friday when it came down, look, we had down here only roughly 42% of stocks above their 50. So it got oversold very, very quickly. Okay, down there. And it pops back up. And now, unfortunately, not as many stocks are back above their 50. So this ultimately is setting up for a potentially larger correction in the horizon. And that's what we want to be watching for now, is for these longer time frame charts to set up. We'll have lots of time to get into these shorts. You don't want to be trying to pick the tops though, and if you are trying to pick tops, then just aim for smaller targets and keep your stops tight, because the trends can go for a lot longer than you expect them to. And the reason that is because there's herding. When there's herding involved, that means everyone's getting onto the same side of the trade, and this allows markets to trend and trade a lot further than you would expect. You know, as the market saying goes, the markets can remain irrational longer than you can remain solvent. This is why you don't want to simply short in an uptrend, because you'll likely get run over. So we're looking for opportune times to get short, like we had this, 2 weeks ago when that low got taken out. This low here on the weekly chart is not going to get taken out. Well, I'm saying it's not. It's very unlikely unless this week somehow it can come back through this range, back through this 3.27% week. Then that sets up for something bigger. If it does do that, you can get plenty of warning, right? Because if thing comes all back through the range here, it starts to get down here, and you've lost 2.5%, 3% on the week, there's going to be opportunities to get short again in this market very, very easily. Okay, let's talk about Qs now. Q, even stronger than SPY, right? So monthly chart up 4.62%. Pretty good month of February so far, right? So Jan had a good it was a good month, 3% up. Now it's up 4.62%. No, this thing opened up here, right? So it opened up there. What's the chance of this taking out that low, January's low, right? So that's pretty far away. So at that time, right? So when it from here to there, it has to drop 8%. Now we're trading up here. So, sorry, that's 7% there. Here is 3.5% from the bottom of this candle to the prior month's low. That's 3.5%. So that's what needed to happen this past week for the sellers to break below Jan's lows. Now we're trading up here. So now price has to come back through and break through 7.4% of gains in order to create a larger monthly reversal. You got to think about how likely that is. Probably not very likely. It's probably why it's going to take a lot more than 1 month, than the month of February before you start seeing a bigger reversal. So that's what we see on the monthly chart. No reversal in sight, but again, if you do see, because these videos are only I only put them out once a week. So as the week transpires, as price unfolds, these are the scenarios I'm trying to lay out for you, is that if price come back through and then threatens the previous week's low or the month's low, then that you'll have plenty of heads up to prepare yourself. So this past week, we marked this high last week. You were looking for, if it was going to work, it's going to have to take out that prior bar's high as a reversal. And that's what it did, right? So price went down 2 weeks ago, took out the prior week's low. Looked very, very shaky here, right? Because this is kind of a shooting star. We talked about it. It came down, but they bought it right back. And for there to be reversal, it had to take out this bar's high. Did that this week. We're back into those all-time highs again, 4.62% week. So we follow the price. Just follow price. All right, so there it is. There's your range. There's your top end, and here's your bottom end. Okay, how do you break the ranges? Or do you go inside weak? It will not be unusual to see an inside weak or a week that breaks out one side and maybe comes back in again, because that's a big week. 4.62%. Haven't seen a week that large for some time, right? So that's a pretty big range. You have to go back quite a ways, maybe that week there. Yeah. Before you have range that big. So the buyers came back in force on the NASDAQ. Based on good earnings, right? Really, that's earnings week, and we had some good earnings for this past week. And so right now the market is shrugging off the virus fears, and right now we're going to all-time highs. What can you say other than that? So on the daily chart now, this is what you want to be looking at. This is what we see here. Last Friday, outside bar, I always say, do not let the outside bars fool you. The outside bars are not a candle or a bar to take action on. You really want to prepare for the next bar. So you don't want to get shaken out based upon one outside bar, unless you're trailing unless you're already in a trade and you're simply trailing, then sometimes that's the right thing to do. But taking a new course of action, you don't want to be doing until the next bar, because this bar last Friday looked ominous to some people. Oh, this is a bearish harami. That's what some people would say, right? It's like, it's a bearish harami because this bar is bigger than that bar and it's red. Doesn't really matter, right? So if you see enough bars, you realize it's always about the next bar. Next bar is this bar here. This negates the bearishness because this is an outside-inside pattern. Then they built a stalemate now, and whoever wins that stalemate is going to likely take control of the price action. And it goes outside-inside and up, one of our favorite patterns. And it went all week until Friday. Okay, until Friday, we have a potential now inside bar reversal happening on the daily chart. So if price breaks below here, then we expect to have a bit of a pullback, and we have an unfilled gap right there. All right, so that would put us back into our the prior week's lows. So, well, down here it would. This is the unfilled gap. So we're waiting to see how this unfolds now on Monday. Which way do they take price? Right now, it is going right into Bollinger Bands, right? So it's doing a Bollinger Band walk. So long as it can stay above the prior bar's lows, we can continue to climb this thing, and this can get very aggressive. But if you do break below, you might expect to have a small pullback. Doesn't mean it's going to clearly collapse, but expect a small maybe pullback back to the 8 period or maybe the 5 period moving average. So on the 4-hour chart, it looks like so. And that's what you want to basically be watching for here now. So here, going to Friday, just a bit of price action. Outside bar down, right? As soon as it breaks above there, momentum gets extinguished. Back up again. Inside bar takes out that pivot high on this sequence here. This sequence here took out that pivot high. Not only did it do that, but it gapped up, right? So this is what caused the momentum and the chasing that happened this week, is because on Tuesday, anyone who got short the Qs here or there, you do not want to see this gap, right? Because if you're short here and you have stops, it jumps over your stop, and now you're like, okay, now I have to try to take a graceful exit somehow. And they did not make it easy. As you can see here, it went gap up and gap up and go, right? And so they squeezed them. They squeezed them right into the end of the week. Outside bar looked bearish a little bit. Does it? Does it really look bearish? To get inside bar once again, outside inside, up, outside inside again. Okay, so again, you want to see what the next bar is, and not overweight the outside bars. Outside inside. Now you want to see what happens with the next bar. Okay, so there's our cues. Do we get an inside bar reversal to the downside on Monday? That's what the pattern that I'm waiting to see play out. Let's talk about Russell. Okay, Russell, the weakest of all the indices. Okay, so there we go. So far, inside month, so not doing a lot for the month of February right now. Sitting inside January's range. Okay, need to see this low get taken out. It's not that far actually. So this low, the Russell's actually not that far from taking out the prior bar's low. So this is actually out of all the indices, the closest to doing a larger correction. Okay, so the Russell has been lagging for some time now, and we're only less than 1% away from taking out Jan's lows. So the Russell needs to be on your watch list here, because this is acting like a canary in the coal mine. If this thing comes back below, takes out that low, it will come back through the range. And that's something you want to know about when you don't have small caps participating in a rally. Quarter, this is currently a red quarter, so down 0.5% roughly. You do have to take out that quarter's low though, Q4's lows, in order for this thing to really get ugly. This will have to turn to an outside bar. Okay, something to be aware of. Now, let's go on the weekly chart. Weekly chart, we do an inside bar reversal. Okay, this is what I called last week. I said, if somehow the buyers can step up, because one scenario that was possible last week, when I outlined it in last week's video, was that it continues to go down, goes inside week down and down again. We break below this part, the past week's lows. Didn't do that, as we know now, right? Opened inside day on Monday, and it broke to the upside, creating the inside bar reversal. We were watching this. We're saying, okay, if they can break above this high, it's a potential for it to come out the other side and take out that pivot. It did not do that. It hasn't done it yet. I mean, it did break above there now, and so long as we don't take out this prior week's low, it's possible now we make our way back up and take out that pivot high. So that's what we want to be watching for and seeing what it can do. The hard part for the Russell now is you have a bit of mixed time frames. See that blue? There's that blue line. There's your quarterly open, right? And here's your monthly and your weekly. And so you're sandwiched in between the two. So the quarterly open there acted as resistance. See that? Hit it, traded above it, kind of hold above it, and it's back into the range again. So that means the quarter's still red, but the monthly and weekly charts are green, as we're seeing here. So on the daily, we get a bit of back and forth. Okay, so there's our inside week on the Russell. That's our inside day on Monday, right? So there's your big Friday down, inside to the upside, right? Results to the upside. 2 nice days of gaps and goes, squeezing all the bears, right? So all the bears. Let's say here, you got really excited 2 weeks ago, on 2 Fridays ago, when it traded and made a big red candle like this. You're like, yay, look, it's, it's gonna break down. You get short here, you buy a bunch of puts, or you sell a bunch of Russell, sell a bunch of Russell stock, or get short futures, whatever you do. Breaks down, you're making some good money. Then here, it says come back to the range, and you're here, you get short somewhere here. Where are you gonna put your stop? There, right? That's the last line in the sand for you, isn't it? You get short in here, or even if you somehow manage to top tick this and short right there, where do you put your stop? Especially it's gone this far, went down here, right? So you're sitting on this. Let's say you got short right there, and it came as far down as that, as 160.03, and you at one point you're up 3 and 25 basis points worth of profit. Okay, now if you didn't take any profits and you're hoping it's going to go lower, all of a sudden does this, comes back up again. Where's your stop? You were up a bunch of money. Now you're break even when it comes up here or close to it, and look what they do. Pow, pow, take out those guys. It happens all the time, right? Happens there all the time because everyone knows the stops are there. That's the way people trade. They put their stops below or above pivots. And and then we say it all the time, do not put your stops above or outside of the ranges of outside bars, because they will always take you out, because the outside bars are broadening formations in a fractal form. And so this creates a higher high, and that took out those guys and their pivots there. Okay, so on Thursday they do that. They push it just high enough to take out all their stops, and then look, then they do a reversal. So they do the reversal here, comes back in, gap fills, and this is a continuation. So this is basically an outside bar if you were to a 2-day bar. Okay, so if you put these 2 bars together, it's outside this bar. There's your outside bar, or your broadening formation, or you can just basically say it is taking out both sides of that bar's range. So there's your selling. It was quite nice on the Russell, because here on the Russell you can see it's a momentum move to the downside on Thursday. Okay, took out the prior pivot high there, goes outside bar and down now. Momentum move, continuation. And that's what you want to watch now, right? How long does this momentum last? A break above that bar's high will extinguish that momentum. Doesn't mean it's going to pop back up again. It just means that this current impulse move will have been extinguished, as we say in each and every video. So watch for that. We're looking for that moment move and to see how far it takes the Russell. Again, we're watching the ranges, draw it in there. So let's delete some of these gaps here now. So let's take some of these gaps away. We have an unfilled gap right there now. Okay, and one there and another one here. Just copy that one over. Another unfilled gap right there. Okay, so on Friday we got our unfilled gap fill. So there was one right there, right? It filled it. Okay, so filled that one there. And now we want to see, let's see if this guy can stick to it there. See if this one gets filled at some point. Okay, so that's the Russell. Watching to see that momentum move if and when it gets extinguished. And I'm just going to draw the ranges once again on this one here, so that we carry that forward. So let's see the range for the coming week. If we can break below this past week's lows, then that's I'll continue to move to the downside for the Russell. Now Dow, very, very similar to the Russell, because we had this same pattern. So just quickly, Dow right now, green month. Okay, did do a higher high. We did hit all-time highs on the Dow. Momentum move up on the monthly, still in play. The weekly, this is the same thing as the Russell, but it was stronger. Okay, so here, inside bar reversal, right? And this one took out this pivot. Why? Because here's the quarterly open. If you recall, the quarterly open for the Russell was higher, and it acted as resistance. Here, you're trading full time from alignment to the upside, above quarterly, weekly, monthly. The Russell was not like that, right? That was the difference, and that allowed this to be a lot easier to take out that pivot high and that pivot high, and that creates all-time highs. And anyone who got short here, they got stopped out because that bar is high enough to take out all these bars. So that's your Russell move. Very, very similar on the daily chart. So I'll just, again, show it inside bar up, up, right? Everyone here gets stopped out. Here, the gap faded. So this did come in, took out, it did the gap fade. You do not want to see that, because if you're long in the sequence and you're a buyer, you got everything you wanted, right? You do not want to see this and come back in the range, because now it's indicating weakness. You were not strong enough to keep the sellers away. They were actually able to take control, and that creates the move to the downside. So on the Russell chart, just a quick look here. Yeah, so that's what happened on the 4 hour. So there's your move. The AM session of Thursday, they're able to gap fill it, and then on the PM session of Thursday, the buyers and sellers hit a stalemate, right? And then more corona fears on Friday causes the gap down, and now you know the story. It did have a bit of selling pressure on Friday, although not overwhelming. Still the key here is to be able to balance the shorter term and longer term pictures. In the short term, people are taking profits. There are some extended longs who are probably leveraged and getting stopped out, over leveraged and getting stopped out. But in the bigger term, right? Look at the monthly chart. It's going up, 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 up on momentum move. So yes, on the short term charts, like the dailies and the 4 hours, you're going to see pullbacks and corrections that are going to stop out some short term traders. But the longer term stuff is indicating it's going higher. Okay, let's talk TSX. Another nice week for TSX. Let's go a little faster here now. Okay, big green month for the TSX so far, up close to 2%. On the weekly chart, did a reversal, down, up, reversal. Now we're going to move these ranges, hitting right at the top, hitting the Bollinger Bands now, but not trading above it. So let's see what happens. Big range there for that bar. Let's see what happens now. In the TSX here, let's look at the 2-day chart. Just keep it high level for now. Here, okay, inside bar reversal coming into this week, right? Reversed on them. It gaps up, squeezes everyone out. So anyone who got short in this sequence stopped out. Now up, inside. So now you want to see what's the next bar. How does it get resolved? Okay, let's talk about emerging markets, because this has been a great instrument to watch. It's been very responsive to the both the trade wars and to the current corona fears. Right now, they had the gas pedal to the downside in January, right, based on the virus scares, and it created this big outside bar to the downside. They couldn't keep it going, right? To be frank, look at this. What happened in the brand new month? It went inside bar. So right now, it's basically a consolidation, right? So both sides are at a stalemate. They can't push it higher, they can't push it lower, and you're stuck inside the previous month's range. So how do you get outside that range? Right now, inside week. So even though we had big ranges, inside the prior week's range, big inside bar there. And so you want to be seeing, like we say every single week, how do you break outside the prior week's highs or lows? All right, you don't have to try to predict that. All you got to do is wait for it and then get on board. That's the beauty of understanding price. Okay, so how to get outside that range? All right, the only tricky thing here is the following. So this could take some time to play out. So the ranges now, right? So there's your top end range for this past week. There's your bottom end. Here's the issue. That's your quarterly open, and down here is your monthly, weekly open. So you have a lot of range here now where this thing can do a lot of chop. This is why we have that monthly chart. This is why we look at the monthly chart, right? Because it's inside month. But just looking at the daily chart, you can see the amount of range that's potentially available for just to chop around and create just a mess as people try to figure out whether it's heads or tails on that coronavirus story. Is Wall Street discounting the real underlying damage to the economies based on that virus, or is the virus contained? Nobody knows. So you're gonna potentially see a lot of chop here until you can break outside these ranges. And so the charts are telling you that this is not a market that's has made its mind up yet. It's certainly trading inside a range and doing price discovery. Bonds. Okay, so is it risk on, risk off? Well, so far for the month of February, it's unknown. It's you're basically going inside bar. Remember, it's trying to go after that pivot high right there. It didn't quite do it yet. It did that on the 7-10 year ETF. On the 20+ year ETF, has not done that yet. But it's not saying it's not going to. It's just inside month right now, so it could just be taking a bit of a breather. Okay, inside month. Slight reversal on the weekly chart. So here goes up and then down, but the buyers bought it back again. Issue once again is your trading conflict. Monthly right there, open. You see that? And quarterly down here. And look, that monthly open still holding. You want to see, can it get above the monthly open? That's what you want to be seeing, looking for if you're a buyer of bonds or seller of bonds, right? Because here is that big range once again. Or I'm going to redraw the ranges now. There. Okay. In order for this thing to break back to the upside, or actually, I want to do this. You have to break above this bar there. Back above that bar will also cause it to be a green month. Okay, so now if you stay inside this range here, that's chop. Okay, that's price discovery happening without time frame alignment, so you can get chopped up in this sequence. So you got to watch out for that with GLT. Not necessarily the place you want to be because you don't have full time frame alignment right now. What about gold? Is it risk on, risk off? Let's look at the gold futures product, micro gold, like in this product. Okay, so right now on the monthly chart, to the upside in January, inside bar right now. So either profit taking or folks not sure where it's going to go. So right now, inside month on gold. Big outside bar though on the weekly chart. Popped higher, but then came back to the range, creating the outside bar. They did buy it back though, starting Tuesday and Wednesday, going into, was it Tuesday, Wednesday? Let's take a look. I think it was going into Wednesday. Yeah, Wednesday started buying it back. So here's the why buy back. So here on Friday, on Monday, it opens up, right? Big scary Friday to the upside, and scary Monday to the downside, right? So this is why you don't want to overweight one single bar, especially when you're talking about outside bars. Outside bar, downside. Once it moves to the downside, once this one gets taken out, so this is Wednesday's highs, the momentum gets extinguished, and we start to pull back up again. This is not necessarily a buy signal because you don't have the support of all the time frames. You have a green quarter, but you have a red and red month and week. So it creates time frame conflict, as I said already, for bonds and for the EM product. And this means it's going to be choppy because if you're looking at this chart here, the weekly chart, does that say buy to you? Right, like buy this chart. No, it doesn't say buy. For most people, anyways, you may be the outlier. Most people, when they see an outside bar like that, they're not saying I got to buy right away. Because what's the best case scenario? The best case scenario is that somehow this thing closes all the way up and turns into a green week. But what's the chances of that? Right? That's very slim pickings. You're just hoping you caught the bottom in here, and that somehow in the next week or so you can make its way back up again. But again, or you just wait, right? You just wait until the next bar. Because literally, this could just go outside bar down. And that's something that could easily happen because the quarterly opens way down here. There's no support from it until down here. Okay, but on the micro gold product, that's what you want to be looking at here, inside bar now on the 2-day chart. Which way does that resolve? And which way does this weekly chart resolve, right? So let's put our ranges back in here. Top end, bottom end. Where's price going to go? In that range? Or does it go inside week? We could very well do that as well. That's one scenario. Now, let's talk about digital gold. Is Bitcoin beginning to act like digital gold? Let's take a look and see. So, I'll use the Bitfinex chart for Bitcoin here. And let's start here, the 3-month chart for Bitcoin. As you know, if this thing can break above this prior pivot high, so Q4's highs, 10,480, then we're going to go back up here to 13,174. That's what I've been looking for. So far, price is slowly making its way up. Bitcoin being one of the slower moving coins right now. The altcoins are really moving fast. Bitcoin taking its time, but still very, very bullish. Monthly chart, small week for Bitcoin, only up 5%. Compare that with the 30% month we had in January, but it's still going higher. Okay, on the weekly chart here now, continuation move. Inside week, we were waiting to see how that was going to break. Remember 2 weeks ago I said it's a quiet week for Bitcoin. We want to see how it breaks, and it goes inside week and up. Look, they're going after that pivot high, right? Can you see that one there? Yeah, 10,480. That's the pivot they're going after now. If you're short here, this is your last line in the sand. If you're short in this sequence, people are going to put their stops right there, and they're going to get stopped out. 10,480. Okay, and here on the 2-day chart now, momentum move to the upside. Here, a bunch of people got stopped out. Outside bar down, then it goes outside bar up. So anyone who got short or long in this sequence, they both got stopped out. If you put your stops in anywhere in this area, okay. And now if you want to get in the move, you gotta chase. So now it's outside bar up. Wait and see how far this momentum takes you. Right now it's outside bar, up, up, continuation move. No point shorting it until one of these lows break. But it looks like 10,000 is, you know, just around the corner. Actually, we might even hit 10,000 as we speak on this particular video. But we're trading at 98.83. 10,000 is the big, you know, mental hurdle. No real resistance there. Just, you know, 10,480 is the pivot to go after. 10,000 is right. Is that 10,000? 99.489. They're gonna definitely take that one out if it gets high enough. 99.489. Yeah. That's the pivot they look for, 10,480. 10,000 is just a psychological hurdle, nothing more than that. There's no real resistance there at 10,000. They should have no problem breaking through that once people take into account the bigger picture, because the bigger picture is that people have stops there, and you know we're talking about price discovery as the means in which the market moves, and you know that's what's going to happen. People are going to keep pushing it until stops get hit. So Bitcoin looking very, very strong. Now let's take a look at the overall crypto market. I haven't shown this chart in a while, but let's take a look at it because this chart looks a lot like Bitcoin. So I don't show it very often because the Bitcoin chart pretty much shows the whole picture. But again, you know, it also calculates some other, also has some other altcoins in there. But there, the reason I want to show this is because this thing did do the inside bar reversal, right? So inside bar down, broke above this high here. Now we're going after that pivot high there, right? So that's the quarterly chart. Monthly chart, look at this one here. Outside bar down, down. Once it broke above this pivot high here, all right, momentum got extinguished, come back up and took out that pivot high this past week. Okay, so there you go. That pivot high got taken out. Now going after that higher time frame pivot on the quarterly. Same thing as Bitcoin, inside week up, up. Right, we took out that pivot high right there. See, there's the outside bar, inside bar. That's when I showed it on Bitcoin, right? Outside, inside, down. We're doing the same thing on Bitcoin now. Come back up to take out that pivot high and potentially go higher. And on the 2-day chart, it's the same momentum move, right? So you see the exact same thing. This thing's actually leading a bit because it has some of the altcoins which are actually moving faster than Bitcoin. So it's like slightly it's trading slightly ahead of Bitcoin. So outside bar up, up, momentum move, just like in Bitcoin. All right, so let's wrap things up now. Let's fast fire a few charts here, and then we'll wrap things up. So let's see where the money's been going. So based upon a modified Sharpe ratio, let's see where the money's been flowing and where money continues to go. So let's bring up some charts here now. Here, RNG, so Ring Central continues to be a strong stock. Again, plowing through earnings here though on the 10th. So watch out for that. We got earnings on Monday. Does this story continue or not? You know, it's been on a run, real run since here, the beginning of the year. Wow, what a move. Utilities, money's still piling into utilities. So even though the risk is, you know, the worries seem to be coming off a bit, people are still chasing yield. So names like Nextera, obviously Dominion, things like the XLU, the actual utility sector ETF, hitting, you know, getting close to these all-time highs. A bit of consolidation here now, but it's probably going to look like an inside month so far, yeah, on the XLU chart. Home builders, well, people still going to home builders. So things like a Lennar, LEN, look at that. It's not all-time highs because, you know, did not catch up to the 2007, 2008 levels, but we're multi-year highs. Yeah, even 28. Okay, we're not up to 2018 yet, but you know this is multi-year highs for Lennar. Same thing with Toll Brothers. So retail, I mean, home builders continue to be the place to be. So think of something like XHB. All right, look at that ETF just consolidating right now, but this thing has been heading higher and higher. Look at outside inside week here. Let's see how that one resolves. Right. Microsoft, wow, got a power move with Microsoft. It looked like it was topping out, but no, it kept going. So here on earnings, right there, okay, gaps up, fades a bit, but that turns into a buying opportunity once it breaks above there, and off the races it goes. Sets up a little bit of an inside bar, potential inside bar reversal here at the top end of this Bollinger Band. Doesn't mean it's gonna all fall apart, but it does have some unfilled gaps that could be filled if all of a sudden we start seeing a lot of selling. And a final one to see, you know, the money's still going in here. Space. So this had been kind of a hot stock that people kind of forgot a bit, but it's still, look at that, outside inside now on the daily chart. That was a buy on Friday. Outside inside, broke above there. That could be a buy because if you look at the bigger picture, look, I'll just draw it in real quick. All right, so this chart here, I'm just going to turn this into a purple So it was a reversal on the weekly, down, up, right? So it was down. So this looked like a shooting star for some people until they bought it back, and then they did a price reversal. And price breaks above 1850, it reverses back to the upside on the weekly chart. Happened right away on Monday. So broke back above 1850 on Monday. Tuesday goes up. Wednesday, outside bar, inside bar, dancing right on that 1850 area now, and it goes outside, inside, up. So that's a buy right there. Continue to track and see space to see how far that goes. Okay, so let's watch space there and see how far that outside, inside bar takes us. Now, some of the dogs. So, man, do you have to go far? The oil names have been getting really hit. So that's why I want to see the oil number on Wednesday. Names like Phillips, Diamond Offshore, you name it. Man, these charts look terrible. You know, they're going right into multi-month, maybe multi-year lows. Oil names getting crushed, although that's good for gas prices. You look at any of the ETFs, you know, whether it's oil exploration, XOP, you know, look at the run it's had to the downside. You know, or OIH, okay, oil services, and these continue to be weak stocks. Not creating new lows yet though, but that is definitely something to be watching out for. People are still leaning on the short side on these names. Same thing, industrials, right? With the slower growth, global growth story, names like Nucor, so steel, people do not want to be in steel companies. Copper obviously getting crushed. So Nucor Steel getting, you know, crushed. U.S. Steel, Nucor, and of course, you know, what are you gonna do? Alcoa, you're gonna be also at the mercy of those shorts. Ford this past week lost their president. You know, the stock got crushed on earnings. They really missed their number, so he's out now. They got a new president stepping in, new CEO stepping in, I mean, and maybe that turns things around, maybe not. But right now, Ford has been in a ugly decline. Jcpenney, retail stock that's not doing well. This one, Jcpenney. Wow, you know what a run over the past 2 weeks or month. Month and a half, be getting crushed, right? So there's Jcpenney heading into multi-month lows. Snap had been a real high flyer. Okay, real high flyer until these past couple weeks. So earnings was not kind of Snap. It lost 15%. But again, last year, excuse me, it had gone from the lows of 2019 was here 535. It went up to close to 20, right? So that was quite the big return. Right now it's a month down. So Snap finally, it did correct a bit, and it took out all these late longs. So anyone who got long here, right, they all got stopped out this past 2 weeks, right? So that's it for Snap. Potentially more move to go. Inside bar up. If it breaks below here, it's going to break below the quarterly open and create the inside bar reversal back to the downside. Potentially more move to the downside for Snap. And names like, you know, that have any exposure to Corona story. Look at Carnival Cruise Lines. People are not going to be taking cruise ships. That one there getting really beat up. And alternatively, you know, even the gold names not doing well. Look at the gold miners ETF, GDX, outside day, and for the gold miners, quite the ugly week. So here, the weekly story here, right? So 2 consecutive red weeks there. Not a nice looking chart right now for GDX. Nothing you want to be buying in the intermediate or short term. Wait for the price to get cleaner, because that's right now is a very, very ugly chart, right? Inside month on GDX. How do you get out of that? All right, well, that's it for this week's video. Once again, I hope you enjoyed it. If you have any questions, feel free to drop them in the comments section on the YouTube channel or on our blog, thetradingedge.org. If you like the videos, please give them a big like, as well as subscribe, so that you can get a notification as soon as they're rolled out. You can either subscribe through YouTube or join our weekly newsletter, where I send out some interesting reading for the week, as well as a notification when we publish the videos. And lastly, it should be an interesting trading week. So once again, make sure you're very up to date on which stocks are reporting, whether or not you have them in your portfolio. And with that being said, I wish you a good trading week and happy trading.